If you do that, you shouldn't even be investing in annuities at all. If you think you need that money later on, if you don't have savings, don't do it, okay? But hey, welcome to John Stevenson, the Guaranteed Retirement Guy show. Today, we're going to be talking about annuity charges, annuity surrender charges, actually, to be specific. You know, why that could be a good thing and maybe not so much of a good thing, right? Do we really like annuity charges? Do we really like surrender charges? Do we like to have an annuity that doesn't give us access to our money, doesn't give us liquidity? Probably not. Most people don't want to have their money tied up, right? They don't want the surrender charges. And these surrender charges and most of these annuities, and this could be any annuity. Okay, this would be a fixed annuity, you know, a MYGA. You had surrender charges, and surrender charges can typically be as high as 9 or 10% in the first year. And then after that, they go down. So it could go down, typical surrender charge schedule that I see goes down, 10, 9, 8, 7, maybe it'll sit in the 6 or 5% range for a couple years, and then it goes down to 1% and then 0. So if it's a 3-year surrender charge schedule, then 3 years, you get all your money back. But you don't lock in that rate for as long either. So that's for fixed annuities. MYGAs is what we call them, multi-year guaranteed annuities. So what about fixed index annuities? Do they have surrender charges? You bet. So when you're looking at a surrender charge and I put $500,000 in, I'm going to have a 10-year surrender charge schedule. Usually probably 9 or 10%, sometimes 8% in some states. It really depends. You know, let's say in the first year you want to take money out. Well, if there's a 10% surrender charge, they're going to take 50 grand. They're going to charge you 50 grand to do it. So you have to know the purpose of putting that money in. Okay, if you're gonna need access to that money in the first year or two, then annuity probably is not the investment vehicle for you, because if you want liquidity, you should put it in a bank account, right? You should have savings of some sort anyways. But if we're looking at an annuity that has a surrender charge schedule of over 10 years, I mean, maybe years 5 or 6, it's only a 5% surrender charge schedule. And maybe by that time, your account has already earned enough to more than cover that, plus give you some extra earnings. I mean, that's always good. But here's the thing, is if you're gonna access that money like that, you have to ask yourself, what is the purpose of your money? Is the purpose of my money to just grow for me, or do I need access to it? And if you need access to it, there are annuities out there that they will give you a typical, 10% withdrawal a year without any penalty. Not all of them are like that, just some. So some will have a 5% and some will only let you take out interest. It just depends on whether it's a fixed or a fixed index, and I can look at that for you. But really, when you're thinking about an annuity and you're thinking about surrender charges and you're like, I really don't want to tie my money up. I want some liquidity, right? Well, when you're thinking about that, think about the purpose. If the purpose of your money is for income, then who cares? Because if you're turning on income right now, you don't care. You're already taking withdrawals forever, for the rest of your life. So if I have a $500,000 annuity, the income turns on, I'm taking out 35 grand a year for the rest of my life, and I'm not gonna really care about surrender charges because I'm not surrendering the contract, right? I'm taking income. That's really what annuities are. They're contracts. They're contracts for income if they have an income rider on there. If they don't have an income rider, you don't have fees, but the income, from my experience, is a lot less. It's typically half that. So, and that's the thing. You don't have to have fees. You don't have to have riders. Typical rider, income rider fees will charge 1%, maybe a little bit more, just depending on the company. But in return, you're typically getting a lot more in income. And so if you're looking at total ROI, a lot of times it makes sense. But hey, I'll leave that up to you. It really doesn't matter to me. I have access to all the companies. I like looking at all of them and monitoring them, and I like showing them to you. If you have, a goal of, hey, I want this certain amount of income for life, I never want to outlive it, and maybe I'm married and I don't want my spouse to outlive it, great. We can set that up for you. Book a call with me. Let me know. There's links below this video that will give you access to my calendar, and we can talk. And I'm happy to share with you any numbers that you want to look at. So anyways, that's it for today. Until next time, look forward to seeing you on the Guaranteed Retirement Guy show. We'll see you soon.